Okay, now we're ready for the next part of this, and this is called job cost. We have process cost and job cost. We're doing job cost first, which means we're looking at an individual job. If you've read the chapter, looked at the PowerPoints, some of this should look fairly familiar to you. So we're going to be dealing with 4 accounts right now. We're going to be dealing with work in process, finished goods. We're going to record a sale, so we're going to be looking at a sale, and we're going to look at cost of goods sold. And this job costs $10,500, and it has a selling price of $14,900, and it's been sold and delivered. And they want to know what kind of entries or what is the flow of this product through these particular accounts. Well, if you know it costs $10,500, you absolutely know it was in work in process to begin with, and we transferred it out. So we would have transferred it to finished goods because it was done. So we debited finished goods T account, and we took it out of work in process. So this one now sits at 0. And then we transferred it to, and now we transferred it to finished goods. Now we've sold it. Okay, so we sold it for $14,900. So that's a debit to cash. We have sales here. We're going to record that. That's a credit to sales. But we also have to record the cost of goods sold because they're using a perpetual inventory. So we happen to know that it's $10,500 is what it costs. That's what's in finished goods. So this is the debit to the cost of goods sold, which is the expense of making it, and a credit to finished goods. So this is the flow. It comes in from the materials, labor, and factory overhead. Then it goes out and goes to finished goods. It gets from finished goods, we end up putting it into cost of goods sold as an expense, and we record the sale. So let's do another one. This one, we purchased material for $50,000. We used indirect material of $12,000 out of that, and we used direct material of $32,000. So what does that look like? Well, I purchased this, so I have to put it in raw material. So here's my $50,000 of putting it in. This would be my paying for it of cash. So it's $50,000 debit, $50,000 credit on cash. And now, indirect materials are what? Factory overhead. So I'm going to put that in. I used $12,000 of it. So it debits factory overhead. See how it flowed there? I take it out of the raw materials. And then I have direct materials, and that would have went into work in process. So I take it out of raw materials. So that's kind of how your raw materials flow through. It can either go to factory overhead, or it can go to work in process. Another one, we're going to look at payroll. Now payroll is kind of interesting. So first of all, we got to record the payroll, and that went right here, $180,000. So indirect was $40,000. Indirect is what? Factory overhead. That becomes a payroll expense of for factory overhead for $40,000. We have direct labor, and guess what that is? So when you get done with this, you have a debit for work in process, a debit for factory overhead, and a credit for the wages payable. Let's do another one. This one we're going to start allocating factory overhead by using an activity base, which is either going to be direct labor or direct materials. And what this says is for every direct labor out, oh, I already have that in there. Hold on, let me show you this. So we're going to take factory overhead at $117,000 and divide it by $468,000 direct labor. And that's saying for every direct labor hour dollar, we use 25 cents is going to be charged to overhead. So the rate is 25%. Now, if we do the same thing, you could do the same thing for materials if you wanted to use materials. And that would be 117,000 divided by 390,000 and an overhead rate of 0.30. Again, you're looking at, okay, for every dollar I spend in direct materials, 30 cents of that, or 30 cents is going to be added to factory overhead. It has nothing to do with the material, the quantity, the price of the material. It has to do with the ratio between the two. So let's look at another one. This one looks at payroll of 175. It has indirect labor of 44, direct labor of 131, and a factory overhead rate of 90%. And it says, what's the applied factory overhead rate? So let's look at this. Let's kind of uncover all this so you can get a feel for what's going on. And we have all this peripheral stuff. So what do we got? It's saying the factory overhead is 90% of direct labor. So direct labor is 131,000. I'm going to multiply that times 90 and come up with 117,000. Now applied, this is applied on this side, factory overhead is different than regular overhead. When I use a factory overhead rate, it's an applied. When I get the actual number, then it becomes the actual factory overhead. And then these two are compared. And we're going to do more of that as we go down the road. But you can see how this is an estimate and the actual overhead will be a debit. This one is what's the predetermined overhead rate if direct material is the activity base. Well, you probably know how to do this by now. You're going to take the estimated overhead, divide it by the direct materials, and come up with a rate of 1.3. Now this one, during the month, a company incurred factory overhead costs of 42, 90, 16, and $54,000. Post to the T accounts to record the overhead incurred in April. This is actual overhead, so it's all going to be a debit on factory overhead right here. And then all of these are going to be credits because they're being pulled out so that they become not individual expenses but overhead expenses. So you can see how that flows. Well, that wasn't what I wanted. So let's do another one. This one is asking total factory overhead costs are estimated to be 1.7 and $1,750,000. Direct labors are estimated at $500,000. Determine the overhead using the direct hours as the labor, as the activity base. Well, that one's an easy one for you. That's going to be 1,750,000 divided by 500,000. So the rate is 3.5. So I have two jobs. One of them has 20,000 direct labor hours and the other has 24 direct labor hours. And they want us to know what the factory overhead is. So you'll take job 50 and multiply it times 3.5. You come up with 70,000, and 51 is 24,000 times 350 is 84,000. So that's kind of easy. You just have to follow what they're saying. Now this one, they're assuming that the amount of the applied for each job is 40% of direct labor costs. And I give you these numbers. All you have to do is multiply it times 40 to come up with the applied overhead. And the very last one is we're going to calculate the estimated total, or the estimated cost for this job. Direct labor is 200 hours at 50, and the overhead rate is $65 per direct labor hour. So how much is this job going to cost us? That's kind of easy now. You know what to do. 200 hours times 50 is 10,000. Overhead's 200 times 65, or 13,000. Comes up to the job's probably going to cost around $23,000. And that's job cost. Now, in the homework, it may be a little more complex, so the very first couple of activities, I am going to have a short video for you. All right, thank you.